Oh, good. Okay.
They're supposed to be signing later, so hopefully that might give us a bit of a
got it
boost.
Oh, yeah, absolutely. Yeah. Well, I'm just waiting on some feedback from the funder on the other one as well. So yeah, I'll let you know. He did text me this morning.
Those on Facebook Live, can you hear this chat?
Wasn't quite what I was hoping for, really, but never mind.
They've chased me this morning, actually.
All right, good.
They're very keen.
Good. Anyway, welcome to everybody. It's good to see the room filling up. Some familiar faces. Jez, great to see you, mate. It's been a while. And some of our contacts from the past couple of weeks as well. So welcome everybody. Andy's here. Siam's here. Dan's here. How are you feeling, Andy? Please cheer us all up because you've got to be in nice, warm sunshine. Come on, make us feel better.
Yeah.
Pass on the rays.
Better, or someone said, yeah, I'm really jealous or annoyed. I'm good. I've got a big webinar with a third-party partner in an hour and a half. And
okay.
No, the reason I'm saying that, because you asked, is I might have to change T-shirts because it's a bit warm and I'm sweating in this one.
Thanks for cheering us up. It's not quite that.
The door's open, the sun's shining. So I'm good, thanks, mate. I'm good.
Excellent. Siam, how are you, mate? Good to see you.
Hey, Guy. Hey, everyone. Phil, Andy, and Dan, and everyone else in the group here.
Yeah. Is the sun shining in Norfolk? Are you in Norfolk today?
Yeah, I'm born and bred and I never leave Norwich. It's just normal British greyness. So, yeah. There's no snow anymore,
yeah,
though.
Same here, unfortunately.
Yeah.
Yeah. And Dan, how is it up in Scotland?
It's absolutely wonderful, torrential, beautiful, gorgeous. It's the greenest, like Siam says. We're in the grey period. And unfortunately, in Scotland, like the last 4 or 5 months, which like every 6 weeks in normal situations, I need to get out of here. And feeling completely jealous of Andy, as I'm usually down your way as well, every month. Yeah. But one quick thing, actually, I was just wondering, Andy, you know, we really should grab you together in a LinkedIn room one day to share your pearls of wisdom of how people could perhaps, you know, crush it on LinkedIn a bit easier.
I would love to, because somebody was saying to me only the other day that there seems to be a lot of rumors on Clubhouse about LinkedIn, and what is his confidence, not arrogance. We have something that is truly unique around automation to get to individuals and getting your posts massive exposure. So I'd love to, because I'm confident there's no one out there really showing and teaching people from this angle. So,
well, I'll reach out to you then. Maybe we'll set something up, buddy, because I'd love to have a chat with you.
Well, what I think we'll do is we'll start. It's a great shout, Dan. So we will kick off today's session on finding opportunities, because that's one of the key components to this room. Is like, how do you find opportunities? And probably just a step before that is deciding what you want to target. We had a really, really good conversation last week with Siam's Nora strategy, which I thought I've heard him talk about it before, but I've kind of forgotten it. So that was terrific. But that's arguably for sort of smaller companies. And then there are perhaps opportunities with large businesses which may appeal to people. But before we dive into that, just want to welcome everybody aboard and emphasize that this is intended as a live Q&A. So we encourage everybody in the audience to put their hands up, ask questions, and use this as an opportunity really to pick the brains of the collective panel. Myself and all the other guys on here have got tons of experience either in business or especially in a M&A. So this is kind of ask any question you ever thought of, whether you think it's a weird one or a detailed one. This is a great opportunity for you to pick people's brains, really. So the simple way is just raise your hand, and we'll invite you up onto the stage, so to speak, and then we'll run through a kind of live Q&A. So Siam was asking me in our little group, you know, is there an agenda? And the answer is no, because I love the live freshness of it, the challenge of dealing with anyone's question and hopefully coming up with an answer between the panel, really. So that's the format. For anyone that's not been on here before, just have a look at our profiles, connect with us on our various social media. And I know from past experience working with these guys that everyone is is always open and keen to help you guys to progress and learn more and so on. So please do connect with us. So while people are thinking about a question that they might want to put to the panel, I'm going to come to you, Andy, because I want to preface this. I've worked with Andy for many years, on and off, but especially in the last year or so, I think, Andy, we've been working with you on the techniques and the software that you employ in LinkedIn. And I can say without fear of contradiction that it's a very, very effective process. It's developed for me and my partners very strong groups of contacts, and it's been a very effective way for us to generate leads into our deal flow for Fidelis Group. So tell us a bit more about how that works, Andy, for the benefit of the people in the room.
Okay, thanks, Guy, and I love you because you are a raving fan because you've proven it to yourself. And my biggest challenge out there is just getting people to believe it, because I had someone the other day say it just sounds too good to be true, and it is what's the word I'm looking for? Not contradictory. People have all sorts of opinions. So I have two things. I have a business partner who's just a freak. He's a marketeer. He's all over LinkedIn. He sold a marketing business, but he's also a developer. It's a rare breed. And we have some automation that allows us to go and connect with your ideal contact every day, and then send a series of messages when you're connected and message your existing connections. And that's something you cannot do without automation. You just don't have time. Most people have thousands of connections. How do you engage with them? And there are terms around it, and people have opinions around it, and is it safe, and is it whatever. If it's of interest, I'm happy to talk to people. Parallel to that, in the last year, we have discovered LinkedIn's algorithm to get your posts massive exposure. And the bizarre thing is, without leveraging that algorithm, LinkedIn only ever pushes your posts out in 8 to 15% of your connections, which is why most people are getting very little views of their posts, whereas we have a route and a club and some tech on how you can get thousands of views of your posts instantly. Then the art is all about writing good content, and things have changed massively since COVID. People are bombarded. Most people are not good at marketing, so we're all bombarded with crappy messages, crappy content. So absolutely, you've got to be writing engaging content. It's a two-part glue. You can't just leverage the algorithm and get your stuff out there if nobody's going to read it because it's poor. And that's what we've developed. And again, that is unique. There's other similar things out there, but nothing ticks all of the boxes. And so it's generating inbound conversations for people all day long, and it is unique. So there's two sides depending where you're at really in your marketing. You guys are buying businesses, you ought to have consistent marketing in place, so both of those elements, like Guy's got, should slot into your business to source deals, but then also the businesses you're buying, if they're B2B businesses, it's just a leveraged marketing strategy that you can.
It's a really good tool. But I just wanted to ask a question, although obviously I work with you, because I think this is a question that a lot of people in the audience are probably thinking about, and that is, oh blimey, have I got to turn myself into a copywriter? Have I got to turn myself into a social media guru, be posting every day? I think there's a natural, perhaps, fear or reluctance in the minds of a lot of people of how much work they've got to do in order to kind of leverage the tools that you've got, really. So is that a common question that you get? I'm guessing it's in the minds of the audience.
It's probably the latter, isn't it? And thanks for asking it, because I just get passionate about here's what you can do. And what I do hear a lot is, I don't know whether I've got enough material to write stuff. What you're saying is actually I don't want to, but hey, you know me, because we first met 15 years ago in my business coaching capacity. Yeah. And you're all about leverage. And if you're buying a business, you should be leveraging your time. You're working on it, not in it. Yeah. So no, there's ways I help members and clients leverage it. And some quick calls. I do a lot of my stuff voice to text. I've actually got my VA in the Philippines right now participating in the post party. Because there's an hour's commitment to get your posts to that level, but Guy leverages it through his marketing manager. How can I leverage writing stuff? By the time you've written a month or two's worth of posts, you can re-leverage, repurpose them. You can use videos. So, no, if you're worried about do I have to learn to be good at this, I'm helping people get good at it quickly. And it's not difficult. It's like anything, isn't it? When you know it, it's easier than you perhaps thought. So if people are worried about time or you've got to learn to market. But I don't know what position you're in buying businesses. Who was it? Ford. Henry Ford said, "I've got all the people around me." So leverage off that. Leverage off me or other team you might have.
I think it's a useful thing to bring in. I know Siam's done a lot of work on content. You had a videographer at one time. I don't know if you still do, Siam. And I know Dan has also done a lot of work on content. Gavin produces a brilliant podcast series. So all of us, to some degree, have done that. Phil's also worked on podcasts. So, Siam, what thoughts would you have around profile and credibility, for example? Because I think that's really important when you're out there in the marketplace wanting to do acquisitions. You are who Google say you are, and people are going to search you, aren't they? So what are your thoughts?
Yeah, I think it's important not to try and get too fixated on the content, because I've gone up and down that sort of sine wave in terms of I must produce so much content, and I can't really be asked, blah blah blah, and you can get stuck in the trap of like writing an article every day, doing a clubhouse every day or whatever, which is what I'm doing at the moment, and all that sort of stuff, thinking that more content equals more leads, etc. But it doesn't. It really doesn't. And I found with other bits and pieces that if you can, in fact, this is one of the things I do when I get into a new business, like with my videography, etc., is that ask the business what are the 20 main questions or Q&As that you have. Okay, every business or business owner will know that at least 20 questions that they're always asked, and then all you need to do is interview that director and go and ask those questions. So before you know it, you've got 20 videos worth of content asking everything, and I mean and that's really good for generating trust for that particular company. So I was one day I sort of reverse engineered it in terms of thinking. I thought, well, what about me for deal flow, for M&A? If I want deals coming into me, for potential acquisitions, well, what are the 20 odd questions that I need? So what I did years ago is I simply got my videographer to interview me and asking all sorts of stuff. So I think it's now very much buried in my YouTube, but I answered all sorts of different M&A stuff. And lo and behold, oh yeah, and by the way, once you make the content, you then got to get it out there, and that's what everyone forgets. It's like set up a new business. It's like opening up a lemonade stand in the middle of the Sahara Desert. Yes, you may have the best lemonade on the planet, but if no one knows that you're there, no one's going to find it. So once you have that content, you need to then push it. So whether you're using Facebook video views, which I find are very handy, or Facebook ads, the Facebook video view is really good. Do you guys have experience with that? With a video view campaign on Facebook?
I personally don't, but it's something that my colleagues work on. I kind of try to work on the basis of where do you want me to be, and I'll turn up and speak, really.
Got it.
But the actual process is not something I'm familiar with.
I can quickly give an overview of that if it helps.
Yeah, I think that would be helpful for everybody listening, I'm sure.
Okay, so with another business, I had this 1 hour webinar, or no, it wasn't a webinar, it was a 1 hour video, which I really wanted new prospects to watch, because if someone sat through that whole hour, they would be far more informed than like a typical prospect or brand new lead, etc. So that was my sort of filter, and getting people to sit still and watch an hour video is quite hard these days, because we all have low attention. And so I thought, okay, how about I turn this into a Facebook video view campaign? So what you do is you put that video as a Facebook ad, but you tell Facebook that the sole objective for this campaign is to get video views. And then what I do is you can then create audiences based on a percentage of that video watched. So I used to do 25, 50, 75, then 99%. And so what happened is that if someone sat through and watched 99% of the video, they will go through to the 99% list, etc. And then before you know, and I chucked a few grand at it, and before you know it, I've got thousands of people that watch 25% of the video, thousands of people that watch 50%, and obviously it goes down. And what I figured is that, or what it ended up, and it's still around that figure, that in order to get someone to watch a 1 hour video, it only costs me £8, which is just phenomenal. Now, for those that do marketing, like to get someone to basically to stop them in their tracks, to get them to watch a 1 hour video, and it only costs you £8, that's phenomenally cheap compared to like holding a free seminar, you know, in person.
Yeah, I think that's right. And if you then progress that through to you know, the return on investment, for example. So in the context of ultimately, someone, you think of the content you can put into an hour's video, it's huge.
Yeah.
So if you're trying to work someone through the know, like, and transact channel, as it were, so
Yeah.
know, like, trust, and then transact. Our goal as business acquirers is to become order takers, not transactors. So I want to build relationships with motivated vendors such that they know, like, and trust me, and then basically you're the guy I want to sell my company to. So
Yeah.
that's our purpose, and I think what you described sounds like a really powerful way to do just that, and to get that relationship going to the point where they feel that degree of trust and relationship. And you know, the return on investment for £8 is almost infinite if you're thinking about the context of acquiring a business. I mean, that's extraordinary.
Exactly.
So I think that's the point you were making, really, isn't it?
Yeah, and obviously everything's a numbers game. So I was prepared when I did this mini campaign to get at least 500 people watching the whole hour. And I think I said, right, there's bound to be one person out of 500 people watching this that will, you know, come through. And not only that, so a little bit more context around that whole campaign is that I was geo-targeting this Facebook campaign. So for example, if you where do you live at the moment, Guy? Or what part of the UK?
I'm in leafy Cheshire.
Cheshire, okay. Let's say you wanted to buy, I don't know, a calculator. I've got a calculator here. A calculator company in Cheshire. Something completely random. Let's say you're in the calculator niche or electronics niche. What I would do is I'd do a video referral campaign. So what I would say is I'd actually make the video probably about 5 minutes long, less than 5 minutes, and go, hey, I'm Guy, I'm looking for a calculator company in Cheshire. I'm an M&A person, I buy businesses, I invest in business, I'm an angel investor, yada yada yada. I've got a pot of money that I'm looking to buy one calculator company in Cheshire. And if you're watching this video, it means you are, this is, I can't think of the words. I'm trying to find people that know calculator business owners. So, if anyone here, anyone watching this video knows of a calculator company owner, and they engage in business and we do business, I will give you a £2,000 referral fee. And then I'd literally plaster that all around that Cheshire, just Cheshire. And so every man and his dog will see this video, whether they're in business or not. But all I'm trying to do is, someone's bound to know someone. And for a £2,000 introduction, like, that's cheap as chips, you know, for a deal. I'd happily pay 10 grand if it was a good deal.
Yeah, absolutely. Yeah.
So then
Siam, Siam, I don't know where you buy your chips, but I get the point, absolutely. Just one more thing on that, which I've found very successful, is retargeting is great, as Siam says, but cross-platform retargeting is also pretty phenomenal. And that's when you're kind of like, you're seen kind of everywhere, to the point that you're either annoying or you get a transaction, one of the two. But one thing I would suggest, which is really, we kind of messed up in October, November, and this is really important, is we started getting some low quality leads in October, November. Now, obviously the elections in the States were there, so that kind of skewed the whole Facebook thing at the time, because they were spending, you know, literally a lot of money. But it's really important to qualify them at the front door, you know, that your lead, and put a barrier up so that the people coming in are exactly what you want. Because we had some poor leads. We've now changed that. We've got to the point where we had a self-liquidating offer at the front end, which is great. So it's not costing you any money. But we were getting poor leads as well. So we kind of changed that, and now we've got a kind of a barrier that they have to jump over at the front end, kind of thing.
Yeah.
Firstly, I think this goes further than that. I think firstly, I want to thank Guy and the organizers for organizing this. This is actually my only second experience on Clubhouse, so I feel a bit like a dinosaur.
Welcome, Ram. It's been a while. How are you?
Very good, very good. I feel older than you for the first time, Guy. So I'm a big fan of Guy and his work with the Business Buying Club. I'm very impressed by Siam's approach to lead generation, and indeed Andy's as well. So that's all I managed to hear so far. I just wanted to share with you that we specialize in business acquisitions. I own and run Chelsea Corporate, just by way of introduction, and we do corporate acquisitions for UK clients and internationally as well. And I think I was wondering if there was a platform where good people like us, who are constantly on the lookout for acquisition targets, be it for clients or for ourselves, can share our turn away deals, because there will be deals that will be good, but won't be for Guy, might be for Siam. Won't be for Siam, might be for Andy. And so we are all working really, really hard on constantly chasing after leads, but we are not doing the most fundamental thing, which is sharing those deals that we don't do. We all see more deals than we do. I mean, I wish this wasn't the case.
Yeah.
We work for 50 clients, for example, and we have a database of 3,500 disappointed sellers who've been introduced to people and haven't done a deal with them. So I'd imagine that other people have similar databases or are aware of similar targets, and I'm just wondering whether there was a way for us to share that deal flow, because we could all benefit.
There is, Ran, but I noticed Gavin clicking his mic, so I'm guessing he wants to pop in with a comment or a...
No, that was just a round of applause, because I think that's an inspired suggestion. So it's Clubhouse speak for a round of applause.
All right, well done. Well, the good news, Ran, is we have just created, I think it's the first in the UK, a live deals hub, because we've got exactly the same problem as you. We are generating more opportunities for sellers than we can possibly handle. So we now have a platform which allows our Business Buyers Club members to go in and see opportunities and leads that we can't handle or don't want to, because it's not in our sector or on our target. And it allows all of our members then to say, great, there's a company doing X that I'm interested in, and follow up on that opportunity. So I think we should have a chat offline and see whether we can collaborate on that, because as you say, it just broadens the market more and more. And the other thing that we've done is just launched FidCap, which is our deals funding platform, which is an FCA regulated platform. And that allows funders and investors to come together to look at financing SME owner-managed business deals in the UK. So again, it's a bit of a first in the UK. So we're working hard on developing that as well. So it's quite exciting. So we should definitely have a chat offline if that appeals.
Always happy to have a chat with you. I think my door is always open.
Absolutely.
And I really value our long-term connection relationship. And actually, very well done for putting this together and putting these people who have different experiences and different abilities and see different deals all together in one room. This Clubhouse is still something I'm trying to get my head around, and the enormous damage it's going to do to LinkedIn and to us having to rethink our marketing strategy now around that, because really this is really the next big thing, isn't it?
Yeah, it's interesting. I don't think so. I'll come back to Andy in a second, because I don't think that it will replace platforms like LinkedIn. I think what it will do is change the nature of the way people use social media platforms, whether it's LinkedIn, Facebook, Instagram, and so on. I think there's too much interconnection. What I think is really exceptional about Clubhouse is the live nature of the conversations and the debate, and the speed at which you can compare things, really. And that's what I see with Clubhouse. I don't think it's going to necessarily replace existing platforms, but work alongside them. So that's my view. Andy, what do you think?
Yeah, it'll be interesting to see what happens with Clubhouse, because I'm new to it as well. In fact, this room you have, Guy, each week is the only one I've done. And I think the way I suppose I look at it in different ways. There's so many marketing strategies, so much social media now. When I set my business up, there was 0, and I had a list of 83 lead generation strategies I could sit down with a business owner and talk about. I got invited to to be interviewed with a property investors Instagram live, and I said, yeah, I'm happy to. You have to show me how to get on Instagram. He said, oh, you can't do it on your laptop, only on your phone. I didn't know that. He said, what you need, mate, is to be on TikTok. I said, you haven't got a hope in heck, because I'm full on with LinkedIn. I've got email campaigns going to webinar every month. I've got some Facebook stuff. I'm just starting some YouTube stuff. Where do you draw the line? You've got to choose the marketing strategies that work for you and your business. And yeah, Clubhouse is good. It's slightly different, isn't it? It's a different take on Zoom.
Yep.
And there's obviously a need. There's an interest. I don't think anything's going to hurt LinkedIn or hurt Facebook. I think they're so entrenched, and they work different for different people, don't they? So I think it's about combining it, isn't it?
Company will either spend the pound on this or on that. I think when a company comes up with a marketing strategy for the year, if they're going to get 50 leads for 100 quid from Clubhouse in one way or another, or they're going to get 20 leads from Facebook, they're going to spend. I mean, that's ultimately the competition, isn't it? I don't think it will take them out, as in there won't be a need for Facebook because of this, or for LinkedIn, but I think they will draw quite a lot of the marketing budget of companies, because look, you can put your face here, people can really get to know you here, and they can decide if they like you or they hate you before they make the initial contact. It's a huge time saver. I mean, I'm a big fan, and I've only started it last night.
Well, just a word of caution, Ran, you can end up going down a very deep rabbit hole with Clubhouse. So I would urge you and everybody in the room today is just manage your time on Clubhouse. But I know Adam wanted to make a comment, mate. So how are you this week?
Doing well. I just want to jump in, Guy, on what you and Ryan were talking about surplus deals. We're certainly experiencing this in our own right as well, and it'd be worth a conversation offline, Guy, for sure.
Brilliant.
About what you guys are doing, because we're seeing this on both sides of the pond, both on the UK and the US side, where we just have way more deals than we know what to do with, and certainly for first world problems for sure, but
it is a problem, and we've got one of my close mates, Dan, is a real master of this topic, and I want to bring him back in because we've got some fresh people in the room today, and they won't have heard Dan talk about this before, but Dan's smashed this topic. If you're on Mastermind, mate, you'd wipe the floor with it in terms of, the demographic change and the transfer of assets coming over the next decade or so. So I'd invite you to talk about that, because I think it's a brilliant topic, and you really have got your head around it. So can I ask you to come on stage and talk about that for a couple of minutes?
Yeah, absolutely. Pleasure. And I don't know about living up to those words, but for me, we all live in an incredible time right now, and I call it the great wealth transfer, and also the kind of great reset. And it's because of a number of different economic and demographic factors colliding together. In the time right now, and there's never been a better time. This is the time to fill our buckets, and why is that? Why is it such an opportunity right now? It's because, well, number one, we're living in, believe it or not, the biggest recession in the UK since 1706, 300 years. That's pretty incredible. GDP's been absolutely hammered. So that's one thing. I don't really want to go into that because everyone is fully aware of that and the black swan that started it. But we also have this digital transformation where the high street is, in the UK, the high street, which is Main Street in the US, is absolutely being hammered over the last 15 years. And that's doing nothing but accelerating. And then we have this other one, the baby boomer generation, which 27 trillion will move from the baby boomers to the next two generations. And that's an incredible figure. And with all that happening, we've also had the black swan event that funds in the UK and the US, I'm talking about land securities, big pension funds, have reassessed their portfolios over the last 6 months. And they're basically saying, okay, stuff we've bought that we're happy with over the last 15, 20 years is now deemed non-core assets. And they're disposing them. And just to give you an idea of the kind of numbers involved, just land securities alone, and I'm talking more commercial property here, obviously, but I'll come back to businesses. The land securities alone over the next 4 years are going to dump 5 billion of assets. Now that's 100 million a month. Now you can imagine what that's going to do to values of commercial property, and you can imagine the baby boomers who are selling, been 3 decades of asset acquirers and now down to be asset sellers, and what that's doing to asset values going forward. So we're living in this period of massive transition from one generation to the next 2 generations, and whoever can get attention is going to reap the benefits here. You need to create attention, build a community, so that you collectively can take advantage of what's going to happen here. And all you need to do is get in the middle, get into that stream, that flow. So for me, there's never been a better time. The recession, the high street evolution, the baby boomers, the big funds are putting assets onto the market, and a lot of those are businesses. And what I like to, my little niche is buying businesses that also own their underlying commercial property, and then turning them from an operation into a blue chip investment. That's really, which is just buying businesses, but a little twist on it. Most people.
Let me add some stats to that, mate, because I think that's brilliant for the audience. But we did some research around our focus, which is small and medium businesses. So some people will buy small companies, micro companies, up to 10 employees, where they're kind of buying a flow, a revenue stream, but they recognize that they're buying a job as well. So that's kind of at the bottom end of the market. Our focus has always been on the small and medium. So we don't want to buy a job. We want to buy a business where people turn up every day, put the lights on, do the thing. So that's the category of small, which is defined as 10 to 50 employees. And there's lots of those. And then medium, which is 50 to 250 employees. So that's our kind of sweet spot. And we did some research into the UK market alone. And we combined that with demography. So we looked at the age of shareholders, because we predominantly want to talk to people who are in a kind of 55 plus zone. And you'd be amazed. And I'll bring Phil in a minute, because he's dealt with a few of these. How many older business owners, and by that I'm talking 65 plus, are still at it, 5 days a week, 6 days a week, 60 hours a week, crazy people, but they're still there and out there doing it. And when we did the stats and we looked at the numbers, it's around about 35,000 owners of businesses are in that bracket that at some stage you've got to sell. Because when you own a business, it's a binary option: close it or sell it. There's no other way. Now, whether you sell it to your management team, you pass it to the next generation. And my experience is most business owners' kids are not interested in acquiring their company. It's really rare. Most of the time, that's just not what they want to do.
So true.
And then secondly, you've got that group of business owners that don't even really know that they can sell a business. So it's just astonishing. So if you overlay that with what you just described, Dan, in terms of property assets being dumped on the market, you've got this absolute driving energy from older business owners who are facing a brick wall. They've got to exit, really. So Phil, you've dealt with quite a few guys like that in your sector, haven't you? Do you want to just jump in with some thoughts on that?
Yeah, definitely. First thing to say is it's definitely real, and it's there. And it's not just in the UK, because I'm actually coming across exactly the same thing in Germany at the moment, which is one area that I'm looking to buy stuff, and in the US as well. So it's a worldwide, certainly a Western world phenomenon, that there was this surge of people born during a particular stage of history, and now they're coming towards the end of the road, and they need, as you said, they need to pass on their businesses in one way or another. So it is a fantastic opportunity right now. The other thing, though, it's not just about age, because amusingly, I'm having calls with people that are actually younger than me, and they're telling me that they're burned out, worn out, can't do this anymore, and I'm just getting started. So age is a factor, and there is this thing, but it's also, if they've had their head down, 5 days a week, 6 days a week in a business for 30 years, however old they are, they just get to a point where they think, I don't want to do this anymore. And there's a lot of people like that, because a lot of people who start businesses never make that transition from actually being the guy or the girl who's working full time in it. And again, that's a great opportunity for us. So pretty much every business I talk to is like that. I
think that's massive, Phil. And I know, Gavin, your background is working with business owners, and the essential difference that I think people miss is how to systematize their business, how to approach it as a toolbox. We talk about MSOF, marketing, sales, ops, finance, and a rinse and repeat process, but very few businesses that I come across, I know Siam's had the same thing, have that systemized approach. That's how I first met Andy, because Andy was giving advice and support and coaching to business owners to do just that. So that most people buy it or start a business because they want freedom. They want financial freedom. They want time freedom. They want to have that sense of freedom, but they end up yoked to their business. And you must have come across this umpteen times, Gavin.
Yeah, absolutely. People set up their business on a basis of a skill set or a product opportunity that they've spotted. They usually tend to be creative, and that in sort of Michael Gerber's words, the technicians, and they struggle to go from that to become managers or even investors. And the systems they just cobble together at the time, they do the best to find out the best way that works, rather than actually bringing any sophistication in, looking for opportunities to create efficiencies and more money on the bottom line. And every business that I've got into, there's always opportunities to improve efficiencies, to put more systems in, to grow revenue, to grow bottom line. And there's never a situation where the current incumbent business owners and operators are leaving money on the table in terms of the sat on top of a mountain of value, but you can't see it because they've just been, I use the phrase, you can't see the label on the jam jar when you're on the inside of the jam jar. And that's the experience that I see in every business that I go into.
I like that a lot. I'm going to borrow that for future reference. I like that a lot. That's really good.
Yeah, Guy, what happened to me? I went through this because I started a business. And the problem is that most people who start businesses, they start a business doing what they know. Mm-hmm. So you go from being an employee who does a particular thing to owning a business that does that thing. And because it's the thing that you know really well, no one else that you're ever going to hire in that business is going to be able to do it better than you. So you end up in this situation where you can't get away from the coalface because you're the best at it. And it's really, really difficult. And my solution is now I buy businesses who do stuff that I don't know anything about. Because then I can't get in there. I can't get to the coal face because I don't exactly know how to dig the coal. And that's one great opportunity about buying a business rather than starting one is you can put yourself in that situation where you have to be the owner and rely on the team as opposed to being the team. Yeah.
It's a much better strategy. Sorry, it's a much better strategy to add value. If your value add is, let's say, in marketing, if you set up a business from scratch, by the time you come to add your value, you're exhausted, you're overworked, you are overly stressed, and frustrated. When you buy a business, you can just go in and inject your specialities, your capabilities, your unfair competitive advantage right where it belongs and make such a huge impact. And when you've got a turnover, even if you increase it by 5-10%, it's huge. If you got a tiny turnover and you increase it by 5-10%, you don't even hear about it.
Yeah, absolutely. I know we've got Nick Bradley in the audience, and I know this is one of your specialist areas, Nick. So I just invited you up to speak if you're able to. Sometimes people are busy doing other things listening in, but hopefully you're able to.
No, I'm here. No, thanks for bringing me up. I have got a couple of young girls running around the black place screaming with what do you call it, homeschooling and all that stuff. But I was just listening in and enjoying the conversation, but no, happy to help and contribute where I can here. So thanks for bringing me up.
I think that topic that we were talking about is the defining difference between the likes of myself and Phil and Siam and so on, who look at businesses as an asset, like Dan does. You got an underlying property component, but they don't look at the business. We don't look at the business as the thing that defines us. We look at it as an opportunity to kind of, refine it, tune it, tighten up the bolts and so on, and make that asset work for us. But the vast majority of business owners, like Phil said, are kind of in the weeds doing the thing, and it defines them. And the big difference is when you step away from that and look at strategies to take that business and scale it and make it a viable asset that's generating money for you, as opposed to down in the weeds. So that's really, I think, the drift of the conversation. I'm just interested to get your thoughts on that, really.
Yeah, I mean, I look at this from the perspective of trying not to bring too much emotion into business, which in its own right, background noise, can make it somewhat, difficult, because, particularly if someone's had their business for so long and they think of it as a baby for themselves. But you've really got to think of it as kind of, it's a vehicle in many cases to do other things. And if you can get that objective mindset, then that allows you to be able to, I think, be able to see the things that are important in business. A mentor of mine sort of said to me once, you've got to ask the question, what am I not seeing? What am I not seeing in the business right now that's going to allow me to do something quite extraordinary with it? And a lot of business owners, I find that bridge quite difficult to manage.
Yeah, absolutely. And I've found as well that the process of selling a business for the seller is incredibly emotional. You kind of, logic would have it, it's all about EBITDA and accounts and numbers and multiples and so on, but actually it's more like getting a divorce. And Phil's been through this as well, that, these guys have been in their business for so long that it is like, getting rid of one of their offspring, really. And they find it a very, very difficult exercise.
I'll give you, I'll just give you a small perspective on this, just so people can understand where I'm coming from. My background was private equity, and I was the guy that was put in as the operating partner in a number of deals. So I was effectively brought in when a lot of those investments were underwater. So the private equity business had paid, or firm had paid a certain amount of money, then the portfolio company was worth a lot less, and then they'd send me in. And that was really about, you have to be super objective then. But you're right, a lot of the problems that I would experience were not that difficult to fix when you start to sort of raise up and look at everything from sort of 30,000 feet. Right, that's the first piece, and then you go down into the detail. But a lot of it was leadership. A lot of it was too much internal focus versus external in focus. Not having enough precision around how things were executed, be that systems, processes, the way you aligned your capabilities and resources. And these are all important things. And where I focus now is, I'm involved in acquisitions and exits, but I like to be in the middle of it. I like to be in the value creation part of the journey. Be that organic, the stuff that we can do to fix and optimize a business, or be that the acquisitive stuff that happens, when you create groups of businesses. And that's where I like to play. So that's why I like being part of this conversation. It's a lot of fun.
That's good. And the key thing that I always teach is always start with the end in mind. So I can teach anybody how to buy a business, but I don't want them to do what I've done, where I've ended up buying a business and then thinking, oh my God, why did I do that? And my ego got the better of me. And I did a deal because I could, not because it was the right thing to do. So starting with the end in mind and thinking about, what am I going to do with this business when I bought it? People do naturally get caught up in what I call deal fever. It's the thing of, I've got to do a deal, I've got to do a deal. But you don't have to do a deal. What you have to do is do the right deal. And then the next deal and the next deal. You need to have a clear strategy as to what you're going to do with that business once you've acquired it. And I know Siam last week shared with us some of his kind of regrets, as it were, where he's ended up with something thinking, God, how do I get out of this? So, and I've done it as well. So for me, it's a massive thing, is start with that end in mind and have a plan to add value, improve, and then exit at some stage, because it's those liquidity events, those moments where we transact, and Rand's done a lot of this as well, where that's really where the source comes in. You in simple terms, buy at a multiple of 2 or 3 and sell at a multiple of 6 or 7. And you're away at the races. But that bit in between, Nick, which you've just described, is critical. And having an understanding of that, I think, is really, really important as well, to have some fun with it.
Yeah, and I think what you said there, Guy, from my perspective, is the piece that's really important. You've got to enjoy it. If it becomes overwhelming, if it becomes chaotic and, everything that you expect to get from this, which is ultimately freedom, right? This is why I think a lot of us do this. A lot of people kind of lose that bit. But I think, the same stuff that you probably teach and advise, there are ways of doing this with with more precision and being able to do it with a lot more kind of intention, which is going to get you the ultimate outcome. But I fully agree. I'm very much focused on the exit. I'm focused on as much value attribution as possible and a multiple arbitrage. So as I said, I buy businesses around that 2 to 3 times. I like to create groups that can go up to 10 to 14 times. And that's where, for me, the fun is. And you can do that quickly, as you know, when you're really clear on exactly what you're trying to achieve.
Yeah, absolutely. I've written about the topic quite a lot, and I coined the phrase, the most fun you can have with your clothes on. That's obviously arbitrary, probably, but anyway, I like that phrase, and usually raises an eyebrow or two along the way. But Dan has some fun as well with property. So you've got some pretty tasty deals going on at the moment, haven't you, Dan?
Yeah, absolutely. I was actually just on the phone with somebody yesterday who's just joined the club, and this chap is both in business acquisitions and in commercial. He's actually in the room just now, but I won't shout him out because he might not be wanting to be shouted out. But anyway, it was a private conversation and a really big opportunity going forward. Now, hunting down baby boomers with medium-sized businesses that don't have any debt. The owner may or may have passed away. In this situation, the trust owned it. But the key thing is this, hunting down baby boomers with medium-sized businesses and doing basically a reverse merger, setting up your listed shell and reversing the people in, because, why would that be of interest to them instead of a straight sale? Because right now they're selling at 3 and 4 times. You amalgamate a group together and you're up at the 8, 9 times, potentially even 10. Now, that can be done. How would you structure that? You would structure that by valuing their business now and then putting a floor there. So on exit, they get that floor level, and then perhaps it's a 50-50 on the upside or 60-40 on the upside because you're doing all the work. And why would that be of interest? Because there's usually no wind left in their sails. They're 60-odd, 70-odd, and they just want a young buck who's got a 10-year sprint in them to go and consolidate an industry, and they're along for the ride. It's their last bat at the baseball arena, and they just want to go out with this thing, and they want to have that story to tell their grandchildren. And even better, if a young buck with experience is going to do all the work for them. And as long as you're giving them fair value, you're reversing them into a listed shell at par value 3-4 times or whatever, then there's no requirement for funding. Which what is the biggest thing that separates entrepreneurs from their assets? Is over leverage. So if you can deal with the leverage and deal with the work where you're just then an M&E house, then that for me is one of the biggest opportunities. Of having a lengthy discussion yesterday, it was a great discussion, loved it, and that's a massive opportunity right now. We've done other things where we bought businesses and rolled them up, and and also commercial property. So trading businesses, we rolled a few up, 30 units at one point, and over 250 staff, and that's great. And then prepared that for sale. On that one, we actually got completely humped by the bank. We did a sale and lease back from the properties from the trade, and ready for sale of the business to a PLC, retain the properties, getting that cap boost, that bump, where your cap rate goes up because you got a very strong covenant on the line, and on a completion day, bank reneged on the deal. So
hard to believe, mate. Hard to believe the bank would let you down.
Can you believe it? But the thing is, everybody goes through failings and learnings, and the key thing is taking the gold. There's always gold dust in those learnings, and utilizing that to get even more creative and do even better deals going forward. And that's the key. And right now, we're all sitting on an absolute gold mine of opportunity with people that want to tie their cart to somebody who's got the enthusiasm, the energy, to really buy up a few of these businesses and simply go from 3 to 9 times.
Yeah, absolutely.
Yeah. So
can I add a? Sorry, you first. Go.
No, 1 second. So just there is some brilliant stuff going on in this conversation today. Thanks, Dan. That was another great conversation. I know you're going to pile in with something else that's equally good, Siam, but I just want to remind everybody that's in the room today, because our numbers are growing, which is wonderful. It's really, really exciting to see. So everybody further down in the room that hasn't yet followed the speakers today, I'd urge you to do so, because I hope by now you can tell there's some really, really good stuff going on here. And, all of us are happy to help and advise and support where necessary. And we're not here to promote or sell, but who knows, transactions might take place. But the primary thing is to reach out and help people. So do connect with us on the various methods, social media, whatever it might be, and ask away if you need any help and support. But go on, Simon, you were going to say something.
Yeah, so I don't want to be a Debbie Downer. I just want to add a bit of caution for anyone that's listening to all of this, that's pretty new to business and also new to M&A. The reason being is that, like, for years, for decades in the self-help world, we've had, no money down deals on property and, buy this for free and all that sort of stuff. And like with normal marketing stuff, it sort of filtered over into the M&A space. And so when you combine, the global macro picture and, as Dan said, there is, an absolute tsunami of baby boomers between the age of 70 and 76 years old right now, all selling up their businesses, etc. It's very easy to sort of get caught up in that wind and saying, oh my God, there's so many deals out there. And yes, there are deals out there, but you have to understand why. Like, yes, they're getting old and they want to sort of, kick their feet up. But they're also, a lot of those businesses are being absolutely hammered by tech and barrier to entry, because it's so easy to set up a business right now that a lot of these businesses going up for sale, you don't really need to buy them. You can just set up your business from scratch. And so at the end of the day, the exit multiples for all these baby boom businesses are being absolutely hammered down. So yes, if you're buying it to get their list, the client base, etc., great, you're going to get them at a massive discount. But don't just ignore the barrier to entry. Can you do this yourself for less? And also, the one thing I've definitely seen a lot, especially myself, is that a really bad or an inexperienced business owner will ruin a great business. So if you've never even run a business before, really, I really wouldn't get into M&A. I would first just set up your own business first and do all the areas there. That's my sort of caution there.
No, two thoughts on that, mate. First of all, I think I'm glad that you've made that point very clear. It's easy to be seduced by promises of, no money down, you can buy a company for £1 and all that sort of stuff. And then in technical terms, that may be the case. But as you rightly say, what are you stepping into? And, there's no faster way known to man to buy a construction company, for instance, that will part you with your cash faster than you can save Jack Robinson, partly because of, the Construction Act and all that goes with it. So you need some knowledge and understanding of business. And if you're not really in that world, then at the very least, if it's something that you want to do, and I love people changing their lives, then find a JV partner. Find someone that's doing it. Like all good JVs, it's an exchange of skills and experience and energy and so on. So, someone like Phil, is open to JVs, and there'll be others out there. Phil's got his expertise, I've got mine, and sometimes that's a better way to ease yourself into the topic, rather than trying too hard, as it were, to make something work and falling flat on your face. So I'd strongly recommend that as well.
I am so pleased that you brought that up, actually. I'm really, really pleased you brought that up, because there are so many people out there who are doing a course for £5.50 or £10.50, and then they come out of it and they know best, and they do what we've all done at the beginning, don't they? They buy businesses just because they can, just because it's not expensive, and then they're met with a legal bill, and they're met with the accounting bill, and then they are in a sort of double-edged sword. On one hand, the seller is saying, well, I'm not giving you any warranties because you're buying the business for free, and on the other hand, they're 50 grand in with fees, etc., etc. And then that's just on the way in. And then, like you rightly said, what are you stepping into? They're stepping into this whole new world that they don't understand. And it's a sure recipe for losing money.
Yeah, absolutely. Daniel, welcome aboard. You obviously had a question that you wanted to put to the panel, the group. Fire away. Daniel, are you there? Daniel Jean-Louis?
I think he's on mute. Here we go.
Good morning, guys.
Good morning. There we go. Hi, good morning.
Good morning.
Morning.
Good morning, Guy. Good morning, everybody. How you guys doing today?
Really good, really good.
Well, it's nice to be in this group. And
welcome.
My name is Daniel, and I run a private equity company out of Haiti, Port-au-Prince. and I work with some investors from the United States, and we started a company very small. I mean, maybe compared to you guys, with about 1 million cash in asset under management in various different businesses and constructions. We took some parts in construction companies and health companies, and now I'm looking into different various options with many companies where I'm meeting from the United States that are trying to get out of China, and I am trying to offer a package where we can offer moving those manufacturing to Haiti with added value, clear added value in labor, in closeness, in getting some raw material from Brazil that is closer, etc., etc. And so they can improve their EBITDA, again, going into the United States duty-free, basically. And this is why I am networking. I am exploring different options to talk to different guys that have done acquisitions, mostly, and so I can get advice, connections, and see what kind of business can we do.
I would strongly recommend that you connect with Adam. Adam Markley is on the panel. Adam's based in the States and is heavily involved in the market over there. So I'm sure you guys would be able to help each other. Did you have a particular question, Daniel, or just keen to say hi and kind of introduce yourself?
I just wanted to say hi. I'm new to the group, and I would love to become a member, if that's okay.
Yeah, sure. Well, like I say, definitely connect with Adam, because I think Adam will be in a good place to help you guys in what you're doing. Looking at your profile, it looks like you have a lot of potential connection there and help each other, particularly on the state side of things. But yeah, good to have you here, and always put hands up and ask questions. So thanks, Daniel. Chase came on board as well. Chase, did you have a question?
Yes, I was late to the room. I was just going to ask, can y'all go over like key topics y'all already went over?
That would take a while, but basically, the purpose of the room is really to give people the opportunity to ask any question fresh out of the can, with no kind of agenda or preparation on anything to do with finding, funding, acquiring, improving, and selling owner-managed companies. That's really the purpose. So we're all about helping people to grow their wealth through acquisitions. So if you had a particular question around that, then that's really what the room is about. So we've covered a lot of ground already this morning, but if you had a question around that topic, then feel free to ask away, and any of us on the panel will be happy to help you with that question, really.
No, that was it. I was just late to the chat. That's all. Thanks for all the help. Well, thanks, guys.
Welcome aboard.
Guy, I must say I'm very, very grateful for you setting this up. I think there's a lot of mileage in this room, and in repeating it on a regular basis. I'm certainly going to do my very best to join.
Sure.
I have to go into another call, but my email address is on my profile, and I'd be absolutely delighted to speak to anyone on anything and to contribute from my experience. So I'm very, very grateful. So thank you very much, guys.
No, that's great. I'll reconnect with you about that deal flow thing, Ran. And every Friday, 11 o'clock, this room is open for anyone who wants to jump on board. So we'll see you next week.
I'll fix it in my diary. Thank you very much.
Yeah, good man.
Thanks, everyone.
Chris, welcome back on to the panel. I haven't spoken to you for ages. How are you doing?
Long time no see, mate.
Hi, good. Yeah, it is. Hello. I saw all these familiar faces and thought I'd come on and say hi. But I hope you're all well. But I do have a genuine question in relation to M&A. It's not something that I'm massively experienced in, but I've been involved in selling businesses before, but not acquiring. And I've kind of read up about a lot of this stuff, and I was late joining this chat, so forgive me if you've been over it. But I've seen a lot of people obviously talk about having deal flow, understanding that you can acquire businesses with relatively little money down. But I wanted to sort of ask the panel and you guys as experts who clearly have done this sort of stuff before. Number one, how realistic is that, especially in, say, the technology market, which is where I'm in, and I'm looking at particular targets and thinking, well, it'd be great to acquire that type of business strategically because it'd help, get into a particular company group. But how easy is it and what sort of strategies are there to get deal flow, as it's called, but also to actually finance these deals? Because I hear, Siam touched on something before, which resonated definitely with me. I get targeted by all kinds of sort of what I would deem as internet marketer type sort of, spamming you with all sorts of sort of courses to say, you can buy stuff for £1 and this, that, and it just does seem very unrealistic to me. But how realistic is it?
I'll go quickly, and then because I know some of the others on the panel will have some comments on this. So the real answer is it's not easy. I think that's a complete misnomer to say that. The kind of the marketing stuff you see out there about someone joined and 2 weeks later they bought a company. The reality is in those scenarios that they're basically buying a job. They're buying pretty much a sole trader or a micro business, and that may be a viable strategy. That may be appropriate for some people. Knowing you, Chris, I don't think it is for what you're trying to do, and I would generally urge people to avoid that kind of approach, really. So ultimately, it's like any business strategy. Ultimately, it's a numbers game. Then you have to set your stall out. You have to understand what you want to achieve, why you want to do it, what's your end goal, rather than just diving in and buying anything. And in terms of IT in particular, the challenges that you're going to come across are, generally speaking, because of the nature of the industry, a lot of the business owners are younger. So they fall into the category, which we talked about already, where people are a bit burnt out, a bit knackered, not very good at running a business, caught up in the weeds of that business. And then they suddenly wake up one day and think, oh, I wonder if I sell it. They look at comparables like Bill Gates and think their business is worth a 24 times multiple.
Yeah.
And then you get into this ridiculous conversation around how on earth do you achieve that figure. And for me, when people talk about valuations, it's the simplest thing in the world to say, well, if your business made 150 grand last year in profit and you want 10 million, I'll probably be dead before I've even got remotely close to paying that back. So, would you wait that long? It's a simple question to pose to people. But then you've also got to look at, as we said before, what are you stepping into? Very, very asset-like companies, generally speaking, are, IT service type businesses. So there's no assets on the balance sheet. People, the assets go home every night. The people are the thing that generates profit where profit exists. So you've got to have a very blended approach to those sorts of opportunities. And I think it goes back to Siam's approach, which is brilliant, around saying, well, look, I'll take a percentage of the shares and work with you and see whether we can transform this business, and work with someone like Gavin, for argument's sake, who's a transformation expert, or Nick, or look at the core components to the business and say, well, actually, what can we do with this? And make it sing so that the value of the shares go up realistically based on process improvement. Thoughts on that, Siam?
Yeah. So I've got a lot of different thoughts. So different vehicles for different destinations is something which is always which we should all be aware of where we are in our personal journey. So if you're like we're in the wealth generation journey, whether you know it or not, and so. Like, for me, the big slaps in the face have been, oh, wow, I need more money, so I need to become a business owner, not a job. And then once I got into business, I realised, oh, shit, I need to get into M&A. Because I wanted to go further, so I needed a better vehicle. And so, because I know you, Chris, we've known each other for years. In your situation, you have been in business for years, you're a switched-on bloke. And so M&A should definitely be... your next port of call, because you've gone through the ringer in business, and so now M&A will be a perfect tool to help bolster your business. I mean, in your case, I'm thinking of a roll-up. You could easily, get on board a bunch of different companies, roll them up into a topco. Your exit multiple will then be way higher than it is right now. So yeah, definitely jump into Guy's M&A group, because he has a more formalized sort of teaching structure there I've got a whole bunch on YouTube, but yeah, I completely echo what Guy said.
No, that's massively helpful to me, because what you've just said, Siam, actually really resonates, and without giving sort of too much away, that sort of bringing a group together is exactly what I'm looking at. But it's interesting when so there's particular groups that I've taken this idea to, particular groups being sort of my sort of close circle, if you will, who are in business, so on and so forth, and some of you will know, and their view of the strategy I've taken, which is, look, I can see an area of a particular sector that is ripe for disruption. It means taking two different companies, rolling them all up and bringing them together, and then taking them on this journey. But the exit multiples would be huge, because this would be transformational in a particular vertical that is crying out for this service. But I can't do it based on the current setup that I've got. All their advice is, we think this is a crazy idea. You got all the headache of this. You need to just build it from the ground up. It might take you 5 or 6 years. And I couldn't get it through to everybody. You don't understand. But in that time, somebody else will have done this. And so it's interesting listening to you guys. And it's, from a learning standpoint, clearly there's just strategies that I am fully not aware of. And it's interesting to know, well, where can you get this information from? So, Guy, I'll check in with you and I'll be definitely interested to learn more about that. Thanks ever so much.
Chris, a quick question, mate. So with this new opportunity, would you be completely redirecting your existing business towards that? Or would you be partitioning a chunk of your company towards that? So,
to be honest, in truth, Sam, it'd be probably partitioning a point, so a part of it. So the work I'm involved with now is very much around digital transformation. And as a management consultant, I've been working in and around that space for a long time. And I can see that medium-sized organisations who are going through quite specific technology transformations in a particular vertical require a very particular set of skills and services that they're having to go to 4 or 5 different places to get and bring together. And that collaboration piece of doing that is costing them significant sums of money. And there's a better way of doing it. And I know how to augment that and bring it together, because I've done it and been paid very well to do it for many years. But it's a case of, actually, if I can, rather than try and bring all these separate pieces together for these people, why don't I just give them what they need in one foul swoop, which will take several other people out of the market and be massively scalable.
And I would also say, Chris, that's a compelling logic for acquisitions, because to do that organically, as we know, takes a lot of time and effort, and there's an uncertain outcome. But if you're able to acquire the components and bring them together and create that ecosystem, that's a really, really powerful way for you to to take that business forward. So I would definitely recommend that. I'd be very happy to chat to you about what are the processes really to do that.
Yeah, no, and I'd be delighted to, and I don't want to sort of hog the room. I'm sure lots of other people have got lots of other questions, but it's amazing to hear that, logically that made sense in my head, but as anything in business, as I've found throughout, you can't do it alone, and where there's a gap, it's like, well, how do we fill it? And it's that sort of level of expertise around M&A. So, look, thanks ever so much for your time. It's great to hear some of you again. I know we've not spoke for a long time, so Guy, I'll definitely check in.
Likewise, mate.
Yeah, good stuff. Good stuff.
Chris, one thing I would add to that is when you're having the discussions internally with your partners or otherwise, just paint them the simple picture of the comparison of what you're looking to do, right? Most of your partners, I'm sure, have a car, and you go to a dealership and buy a car. You don't order all the parts and put it all together and then drive it. You buy one that's already made. It's a lot faster to get down the road you're going. And so when they're thinking, go start the business and put all the you're not buying it, and then you faded out there, Adam. I don't know if you lost your connection slightly. Or did for me. Let's go on,
finally. I agree with what you said, Guy, and I think from Chris's point of view, there's a great way forward for him in terms of the acquisition thing. The only thing that I ever get wary about is when people start throwing around the word easy. It'll be easy to do a roll-up from where you are. It'll be easy to do this and that. None of it is easy. It's doable. absolutely doable, but just never say easy.
No, it takes a lot of effort and commitment and patience, and it's a numbers game. As you say, there's a process. It's completely achievable, but it's definitely not easy.
Nothing in business ever is. I think we all know that. But it can be fun. It can be fun.
Yeah, absolutely. I'm not sure how.
Guy, the interesting thing is, I completely agree with you. It is not easy. Anyone that's been there and done it, any kind of acquisitions, knows that it's a psychological kind of roller coaster. But the thing is, if you've done it before, it gets a hell of a lot easier the second, third, fourth.
Once you get past the first one. Yeah, absolutely.
And if you reach out to somebody like Guy, then what he does is collapses time to get the same kind of results as you're wanting to get. So that would be my advice. Jump into whatever Guy's. If you, I don't even know if you're still doing one just now, Guy, right?
Yeah, no, we are. Yeah, we've simplified everything into a 6-month course. So with live coaching as well. So you've got a software tool in the background and then live coaching from me. So we just made the whole process a lot simpler and easier to access.
Yeah. Well, that's going to save a lot of time, effort, and money, to be honest, and not making mistakes.
That's it. Yeah, it's a mistake avoidance course. If it's anything, that's the whole point.
So, Guy, do you mind if I've got a? Sorry.
Go on, Sam.
I've got to shoot off imminently. So, do you mind if I just say one more thing to Chris?
Please do. Yeah.
So, Chris, in your situation, I was thinking of what I call the EE model. So, I guess the backstory for this is, as you know, one of my companies is a trading education company, and I was chatting with one of who's a really good friend, but is also my main competitor, and we were thinking of sort of joining forces to, like you're doing, exploring this different avenue, and I call it the EE model because what happened with EE, as in the mobile phone network, is that Orange and T-Mobile teamed up. They rolled up into a topco and then took the UK by storm. And they literally overnight became the UK's biggest mobile phone company. And so what I was chatting with this other trader was going, how about we completely, destroy our brands, so to speak, and then join forces in a topco, and then, be the shining light of, ethical, training in the UK, blah, blah, blah. And on paper, it would have been really good because, with our combined forces, the amount of students and, the turnover from both companies, that topco would have done really, really well. Unfortunately, the deal never came to fruition because we couldn't find the right terms that we could both agree with. So we're still friends, etc. But I think you could possibly do that with yourself. So you just need to find 2, 3, hell, even 5 other people that are like-minded and open-minded as well, and saying, look, there's a brand new niche here. All we need to do is do a massive roll-up. We can still do the bread and butter core business that we do, but we really need to eat this market share and own it before it becomes a thing and other people start, setting up their flags, if that makes sense.
No, it does, mate. It does, and I do understand that kind of what you've expressed there, and it is incredibly helpful. I think for me, there's probably a step before that to understand, how all this is structured together. But that is incredibly helpful. I mean, I really appreciate it, guys. Thank you ever so much.
Cool.
That's good, and those kind of questions are always helpful to the wider audience, Chris, because that's what this room's all about. So those kind of questions and others that people have, help to inform the audience broadly, really. So I'm keen to, I know Sam's got to go, and I think, Dan, you're on the clock as well, but I do want to try to get around people that have asked questions, put their hands up. So the next in line was, I hope I pronounced your